Hello folks, welcome to the weekly chart review. We're going to dive into Nasdaq and stocks. Alright, so this is what we're sitting at now. I'm just going to zoom in to how the week went, and we'll do it on the 1 hour chart. Alright, maybe a little tighter. Okay, there we go. So what ended up happening is 2 weeks ago, I was expecting this gap to close. All right, a little over 2 weeks ago, right? When I did my, what was it? When it was the September 24th video around here, when I did it, I was expecting this gap to close the following week. It just took a little longer to get there, and then it finally ended up closing on October 5th. Okay. So that was kind of my expectation. That was my target for it to get back to that zone before it would continue to drop. And sure enough, as you can see, it wicked off that to close off the gap, and it started to drop for the following 2 sessions. So this means 2 things. Number one, it shows that there is a very significant resistance zone. Okay, it's actually bouncing exactly off of Fibonacci, and I'll show you right now. Okay, I'll get it off this peak right here, down to this low, and I'll just extend it across. Look at that. Okay, so the gap was just a little bit above the Fibonacci line. And as you can see, when it opened the following day, it struggled to close above that. Like it closed just below here. This one was a significant wick down, then just wicked up, and then it closed lower. So it was a lot of garbage volatility as far as Thursday trading went. All right, but because it struggled to go higher past that Fibonacci, this ended up going much lower. All right, and then Friday reports came in, and the market just tanked 420 points, I believe it was. So that's kind of where it was at. Exactly what I was expecting of a move. I was just expecting it 2 weeks sooner. All right, so right now we seem to be just a little bit delayed with the moves that I'm kind of expecting here. And I'll show you right now on the Nasdaq long term here. Okay, I'll zoom it in on the daily just so you can get a better idea. All right. So there's a popular opinion right now that there's going to be a rally for a few weeks going up. I think that's going to be a little premature. I'm expecting it to still go down about, well, from here I was expecting another 400 points, but we closed slightly higher for the week. But as you can see, it's almost nothing. Like there was barely any moves on the weekly candle, right? Like it went up and down drastically. But as far as open to close, it was only about 36 to 40 points, right? I can't really zoom in that well here. But that's more or less what happened, right? Barely any moves. For me, when I see a very large wick to the upside, this is almost like a bearish hammer candle. And the only reason it's not is because there's a wick down too, right? So we can call this a bearish spinning top, whatever, right? Like ultimately, it doesn't really matter all that much. All it's telling me is that there was a lot of interest to go up, but significant rejection, right? So now it's pushing it to go further down. And again, to go as far down as I'm expecting, it's just going to be about 400 points and change, right? So from here to the low, let's say to the middle exactly 556, to the top of that box 430, right? So anywhere in this box, I don't really think it's going to go as deep as another 600 point drop, but you know, 430 to maybe 500, pardon me, around that area seems to be pretty reasonable. There's a lot of data coming in on the US currency as well. So if you take a look at Forex Factory, there is going to be some significant moves happening on Thursday and Friday. All the PPI reports, CPI reports, unemployment, a lot of stuff is coming in for the US currency. And that really does impact the stock market. So you're going to see a lot of volatility those last 2 days of the week. Personally, I really don't like playing volatility, especially if it hasn't hit a target of mine. If it has hit a target, then I mean, it's going to be a lot easier seeing where it's going to go. But just as an example, every long wick that we have seen, it's been on some reporting days. So right now, just do some due diligence, right? Check out June 10th, right? Because you can see June 13th, that would have been a weekend. So June 10th and June 13th, look what the data showed there. June 16th, Thursdays are typically when PPI and CPI data come out. So take a look at that. June 28th. What's another big one? Right here, August 26th, right? So look at the popular theme here. June 10th, a Friday. And the only reason I know that is if you look at the bottom, it skips a few days, right? That's when the market's closed. So Friday. Not right. This was Friday, the big green one right here. Nothing big there. Nothing. Summertime is typically quite slow as far as movements are concerned. But watch this. See? Friday into Monday. Right here, 2 red candles. Friday. Thursday. No, sorry, that looks like a Tuesday or a Monday. Yeah. A Monday, Tuesday. That's a Tuesday. Right? So, but the majority of them you can see it was a Friday. Let's see this one. 21st. Nothing. That was a Wednesday, so not much. This one right here on the 30th. Just a small red candle down. So Thursday and Friday. Goes up. Thursday and Friday. Starts going down. Right? So challenge yourself to find out what those dates actually have in common over the last 3 months, and then you'll be able to kind of see when a report comes in with X amount of percentage or dollars or a sentiment or whatever, you'll be able to gauge how the market moves on that particular day. So it's going to be very easy when the news is typically in at 8:30 a.m. Eastern, how the market is going to go the entire day based on that sentiment, right? So let's say unemployment data is worse than expected, stocks will drop. If CPI report is, higher or lower, sometimes it doesn't matter which way it goes, right? That's kind of why analysis matters. All I'm saying is that first move in the morning will set the pace for the rest of the day. And that's what I've noticed as far as continuing trends. So now I want you to look at this long-term daily time frame, okay? We've been going right now. There's an EMA shift right here that happened at the end of this candle. So since August 23rd, look, no shift. Oh, that was super close right here. Super close right here. And it's still going down. Okay, there's still no EMA shift. This tells me that until I see an EMA shift on the daily time frame, I'm bearish. Simple as that. Okay. If it so happens that this week we end up going bullish, great. I'll move my estimates a little higher because I'm still expecting a 400 to 550 point drop, right? Depending on where it enters this box. If it makes a double bottom right here off this yellow and starts going up, then at that point I'm going to move all my data analysis up a couple hundred points upward, right? The only reason I'm expecting this move down here is from previous moves. So yeah, that's kind of Nasdaq in a nutshell. Let's jump into a couple of stocks, ones of interest. So let's see, AMD received some pretty nasty news, right? And it just basically came out with news saying that everything is going to be delayed, less chips, yada yada. So it dropped nearly 14% that day, right? Look at DocuSign, hit my target. There we go. So I'm going to be happy jumping in here. I'm going to see how the market opens on Monday, but that is a good sign. I was waiting for that 47 mark, right? If you listen to the last video, that was my target for DocuSign to hit. It looks like it just dropped 4.2%, which is painful if you're in it at that point. But for me, I was kind of expecting it there. So DocuSign, great place to be able to jump in for me. Judging from where it was, that's the end of the gap closing. So I mean, it has basically like 20 cents to completely close it off. So yeah, maybe getting it at the bottom of the $47 would be a better choice, but it all depends on the open. Like I said, if the market starts dropping on Monday, I'm not going to jump in on anything. If it starts climbing on Monday, I'll be a little hesitant. I might enter with a small position. If it keeps climbing Tuesday, then I know at least my small position is safe. Right? Anyway, so that is how I'm feeling about that. Dropping down, Oxy, it was going well for the majority of the day, and then it ended up closing below its previous open. So if we take a look right now where we're sitting, and we take a Fibonacci from that high to the low, you can see that we've crossed the 618, almost went higher, but it kind of struggled to go much further. However, we did end up going on the daily time frames. We passed a couple of structural zones. Okay, and if we take a look at the Camarilla pivots, we broke through the R4 on the Thursday and rejected off it on the Friday. Even though it was still a negative day overall, it bounced off that area and went higher. Okay, so Oxy is looking pretty good. Progeny, I'm liking this price action right here. I'm going to wait until this gap ends up being filled, so maybe at the bottom of $32. It was a great chance to jump in when it was around 29. I really enjoyed that 1 week where it went up over 40%, so I'm very happy with that. Roblox keeps dropping. I expect this to go further. Even if we just do a simple fib off the previous low, you can see that it's already sitting at the 618, and it's been it broke through and rejected it twice. This is number 3, right? So if we open higher on Monday, that'll be a pretty decent sign to jump in. However, I'm not a particular fan of Roblox. And the one good consistent stock that I would say is Tesla, right? You can see how it rejected in that same point 3 times near the 618 fib, okay? Currently where it's sitting, it broke through the brown EMA, which is my 618 on the daily time frame, and you can see how it played there previously. Broke through and then shot right back up. Kind of touched it and went right up the next day. Touched it up the next day, and then it gapped up the following day, right? So this is telling me there's a very significant chance that this is going to be bullish on Monday, just because of previous history. And if we take a measurement, right, just from that EMA line right to the bottom, that's about 4%. Okay, right now from the EMA line to the bottom, 3.12%. Okay, let's see how the other one was right here, the lowest that it went, 3.5%. So it's on track. It may go down another 0.25%. Doesn't seem like that high, because that'll be the equivalent of maybe, what, $1, less than $1, like 75 cents, 65 cents. So yeah, I mean, I'm not really expecting Tesla to go much lower. The strongest case that I can make for it is if Monday is a day that everything starts to drop once again, Tesla may consolidate before going up, similar to what this pattern was right here. Or if it gaps down, it'll have a bullish day. So that's kind of what I'm expecting for Tesla. Like I said, a lot of my targets were hit as far as the lows. This is a very good chance to jump in on several stocks, which now that we see how the stocks are going and where their rejections are and where the targets were, it kind of shows. I'll switch over to this Nasdaq chart. Where are we at? There we go. Right, it kind of shows me that there's a very strong possibility this target will not be hit. Right, the only way that it'll happen is if it's going to be a slow bleed down over several days, and the larger stocks kind of don't really go anywhere. All right, so 2 major things to keep an eye on. My Nasdaq target hasn't been hit yet, so I'm still bearish. A lot of stocks that I'm interested in have hit their low targets. So one of 2 things can happen at this point. Either we're going to keep dropping in those targets, whether entering now or entering a week from now, they could potentially be lower, which would be great to be able to jump in on them at an even lower price. Or my target for Nasdaq is off and the stocks will take off from their current lows right now. So one of those two things. Playing options, probably a little bit up in the air for me if it's around that kind of targeted area. If the stocks have hit my target for entry, but Nasdaq not quite yet, this is more of investment strategy swinging, right? Where I buy the stock rather than buying the option for the stock. And long term, that would probably be the better solution anyway, unless I plan on doing options trade that's... Oh, excuse me. See, problem of filming at night. But anyway, otherwise, the option of taking options over a month out for them to expire, that would probably be my choice there. Like I said, for that specific type of call, I'm more comfortable actually taking the position rather than the options. When I sell a position, that's when I'll be comfortable taking put options. Simply because you can't invest negatively, right? Like options are the only opportunity to make money while it's going down. So yeah, those are kind of some of my favorites in a nutshell. That's what I see happening. And again, guys, if you're watching these videos and there's something that you want me to go over, whether it's going to be financial analysis in the future as well of any particular companies, write that in the comments. I will be aiming to start doing those videos in November when me and a colleague of mine will jump into a specific stock or two, dive into the financials and how all that looks like, if their long-term looks to be very profitable or positive, and if the technical analysis lines up with the financial statements that they come out with. Okay, so thanks very much for tuning in, guys. I'll catch you next week.